You are watching Market Watch, the brief overview of the key events from the world of finance. The penultimate full trading week this year may become volatile. The first important event will be the publication of the U.S. inflation report. A further decline in this indicator, especially at a faster pace, can put strong pressure on the U.S. dollar. After all, despite the fact that investors do not predict a rate hike this year, a significant slowdown in the growth rate of the consumer price index will increase the likelihood of a reduction in the Fed's key interest rate. This is a very important moment for the market, because today we are not talking about easing monetary policy, but only about completing the process of tightening it. No less important for traders and investors will be the publication of the forecast from the Federal Reserve, because incoming statistics from the United States do not indicate a significant slowdown in the growth rate of the world's largest economy. If the report of the American regulator mentions a recession or at least a further slowdown in the economy, then it can put noticeable pressure on the US dollar, returning interest in gold. At the same time, it is very important to pay attention to the forecast of future changes in the key interest rate. If no member of the committee predicts its growth anymore, it will also be a bearish signal for the currency and bullish for gold. I talk so much about the prospect of a bullish fundamental factor for gold because it has come under a very strong wave of sales. At the beginning of last week, the historical maximum was updated, and by the end of the week, sellers almost broke through psychological support at the $2,000 mark. But in early trading in Asia, this level was broken, although the activity of sellers remained weak. Given the significant sales in the precious metals market, it is necessary to take into account the risk of renewed growth. And this growth may be triggered by the unexpected appearance of information about the Fed's willingness to cut rates. For example, the return of inflation below 3% year-on-year and the appearance of deflation in a month-to-month ratio. Concluding today's review, we will traditionally talk about the cryptocurrency market. Unlike gold, Bitcoin manages to stay near the reached highs. But it is important to understand that the stronger it grows, the more important it is for investors to receive confirmation of the readiness of the U.S. Securities and Exchange Commission to approve an application for the creation of a Bitcoin ETF. After all, otherwise a very powerful wave of sales may occur. But at the moment, the bullish scenario remains a priority, until the moment when quotes return below $41,000. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.